Watch us trade live right before your eyes from 5 a.m. to 7 a.m. every market day Pacific time. Join us now only on SwissFT.com.
Good day, traders. This is Richard. Today we're going to watch a short video that Larry Pesavento presents on just like this every day. This one is for today. Let's watch it and see what he has to say about the Dow, NASDAQ, S&P 500, oil, gold, beans, natural gas, etc.
Okay, folks, we're up again tonight. Dow's up about 80 points. We're not quite to the old high. We're about 100 pips away from the Dow Jones futures. We're still have not reached that level. You can see we're 100 pips away from that. But this key cycle date, the last is between the 10th and this is the 11th. You know, tomorrow's the 12th, and guess what? The 13th is Saturday, but this should be a major top in here. Just like this was a major bottom, this should be a tradable top up in this area. Whether it's the top, I don't really care, but you got double ABCD patterns up in here. You've got this one and that one, and it just goes a little bit higher and higher. But what I would be doing now is getting ready to put on a short position. I would use the Dow Jones because it is, it's frankly just a little bit weaker than the S&P. The entry point, if you take a look at this, you'll see here, this is where we were today. We haven't quite got up to this level right here as of yet, but let's just move this over and see what the ABCD is on this big one right here. And that's where I would probably take a look at it. Hold on one second here. There's your AB leg right here. There's your CD leg here. There it is at 3079, 38079. So that's up about 100 points from where we are right now. You have to risk 200 points on this, folks, because if it works, it's going to work big time. People have asked me, how do I feel confident about this? Well, I feel confident about this as I did at the bottom on the 5th of March in 2000 and what year was it? 2009. It's got all the things that are there. All the patterns are there. The cycles are there. Maybe this is the time it doesn't work, but if it doesn't, there's going to be some other things that'll be working pretty good. So anyway, that's what I'm taking a look at here tonight. The other one we want to take a look at here is the natural gas. We were hoping for, hoping is a terrible trading word, by the way. We were looking for a 382 to come in here somewhere, but you can see we didn't have anything here at all. And certainly we didn't get anything here tonight. The 382 on this would come in at around this level right about here. And that's at 3112. I would certainly consider that as a sale risking about 10 points up into this area right here, because that would be a perfect 312, 382 level where we are right here. That's it. Now, the other one that we're watching, hold on one second here. Here are the July soybeans. They're not ready yet. And boy, they came down and then they've rallied up a little bit here. We're still waiting. Let's get this up on the daily because you're waiting for this level down in here is where I'd be looking. We got the crop report tomorrow, folks, so we got to wait on that. But no matter what, if this thing is really bullish, we had this gap down, doesn't mean a whole lot because it's on its way down anyway. The fact that we've been here for 1, 2, 3, 4 days, but we've got that report coming out, and those are crazy ones. But like I said, I'd be buying down here, 40 cents lower. The July soybeans. Now, July is new crop beans. They're not even planted yet. The farmers haven't even decided whether they're going to plant it yet. That's the main thing. The other trade that we have working out here is the possibility here in the Treasury bonds. Hold on one second. It's a little early in the morning here for me, folks, but the alarms went off, so it's important that I get back to you. You can see we have another potential pattern coming in right up here. That's where our order settings, you know, that this may not work, but it's a 382. It's everything we look for, ABCDs. Seller there, stop above that point right here. And I think those are the only ones that are open that make any sense. We're out of the hog market, and I suggested getting short there, whether you did or not. Your stop has got to be at 73, 73.50. You got to risk about $600 into hogs, but we had a nice run on the upsides. Let's see how it all turns out. Those are the ones that we're looking at here this morning. It's a little early, so let's take a look. Oh, let's look at one other one, and that is to take a look at the Bitcoin. I know I'm not involved with this. I'm just watching the action of it, but the coins have been approved. They're not trading tonight. At least I don't think they are. Let's just double check. I don't use this stuff very much, so I don't really know. They are trading tonight, and it's at 158. And let's do that. Go down and look at the daily here. It's at 151. And the intraday tells us that it's trading up about a little bit here at the got up to 163 is what it did. Did it make a 382 in this whole thing? Boy, that would be interesting, wouldn't it? It went a little bit above it. It's trading below it right now. So anyway, that's what I see is going on. I don't really follow too much of that Bitcoin stuff because I don't understand it. But I do think I understand stocks, and I might be wrong this time. And if I do, you guys are going to stick with me. You've been with me long enough. We've done pretty good on these things. This one doesn't work. There's another one coming. So all I can tell you is I feel confident, but nervous, and that's always a good thing. Did I feel that way in March of 2005? Oh boy, did I ever. I was getting all kinds of flack. Say, are you crazy? And yeah, well, it's crazy good. It's the same type of a pattern, folks. It's the same type of cycles. Whether it works this time or not, it's going to be an interesting phenomenon, but we're here for the game, and we will be okay. All right, now let's move on here, and I think that's going to be it for tonight. Let me see, it's 1 o'clock now, so I'll probably in about 4 hours. We have a CPI number coming out, but I don't know exactly when it is. It's probably early in the morning, but then there'll be some volatility, so we'll see what's happening then, and I'll send a new video out if necessary. That's it. Live every day in an attitude of gratitude, and may God bless.
Thank you, Larry. This is Richard. Now, I'm talking to our audience, and our audience consists of people who want to learn the financial markets. Well, Larry talks the nitty-gritty about the instruments that are moving today. Now, there's instruments that move every day, like crude oil and gold and the Dow and the S&P. He mentioned Bitcoin, which is brand new to trade. It's been around for about 5 years, maybe 10. I can't remember because I've never traded them. I don't understand them. He doesn't understand them either. Bitcoin is new to us. I'm not going to trade Bitcoin this year. I might do it in 2025, but not this year. I'm going to watch it. I might trade it if everybody else begins to trade it. And a lot of people have been trading it. That's just a side issue, just a headline for the future. And we do trade futures. And when we learn more about Bitcoin and understand it, we'll trade it. But we know about soybeans and hogs. He mentioned those. We know about the Dow. We know about oil and gold. And we can take money from the market most every day from each one of these instruments. But it doesn't pay to try to trade them all. Larry sends out this message, which he does early morning most every day. He doesn't usually send one on Friday, and sometimes he doesn't send one on Monday morning, but he'll send one out on Sunday night. He sends them, and he charges a very modest fee for you to be able to read them, and it's worth it. I use it every day. I want to know what Larry's thinking about which instruments every day to start my engine. And I start at 5 o'clock in the morning. He put this out about It says right here, 4 hours ago. We put this out somewhere around midnight Pacific time. And now it's 5 a.m. right this moment. I started playing this video at about 4:40 this morning. I want you to know that this is useful, but it's complicated. And you're going to take a look at this and scratch your head and say, I don't understand that. I can't do anything with that. Well, I understand how you feel. And that's where I was about 5 years ago. 20, this is 2024, January, and 2018, 2019, maybe when I first saw these videos. And he talks about 3 to 6 instruments per day, sometimes 3 times a day, sometimes only once. But what he says will guide you in your quest to better understand the financial markets. Let's try to digest all these squiggly lines. Now there are several patterns that make up all these squiggly lines, and we look for those because they tell us what is going to probably happen next. This little green set of geometrical pattern drawings, this X, A, B, C, D. When you get to D, you start at X, and it's a 5-point tool. It's called the Gartley, and it's been around since 1935 when Gartley wrote a little book that millions of traders have started following gradually from 1935 to 1945, 1955, 1965, 1975, 1985, 1995, 2005, and now 2024. It works. When you see it complete at a point, at its D point, the direction of the movement will change to the opposite direction. When you get to that point right there, look for a sell. And then here's an A, B, C, D. That's a 4-point pattern. That's a 4/5 of a Gartley. And at that D point is where you need to sell and see how price went straight down. Not straight down. And that's what gets people. Is it starts down and then it starts going against you like it did here. And that's another A, B, C, D inside of this bigger A, B, C, D. This is reading the mind of the market just instance before it's going to change direction. And your trade is at the point it's going to change direction. You're going to buy and you're going to sell intermittently throughout the day at these points. Here's another Gartley pattern. This green thing here starts way down here at the bottom, and we found a bottom down here and we bought it. This is X, A, B at the bottom of those candles, C at the top of those candles, and D at the bottom of this cluster of candles. And this is this buy signal. This is where you enter. You could have entered short up here and ridden it down to here and buy it here and ride it up to there. And now I would sell it here after I wrote it, buy it here and sell it there and let it stay out while it gets down to here and buy it back there and go on back up. But that's how a scaredy cat trader trades, because I like to take, if I'm going to buy it here, I want to take my profit here and wait for it to finish its retrace against the buy, which it will do. That ABCD works every time. Now you can predict how far it's going to go down here. 38%. If this is 61% up from here up to here, or even maybe 78%, you know that the retrace is going to be 38%. And so you can just tough it out and stay in it and expect it to resume its descent and go back up here and make a higher high up here, as it did. But you don't know that when you're new to trading. I propose that you take what you know and buy it here and sell it there and wait for it down here and buy it here again and write it on up. That's a way to hedge your trades during your learning cycle. And I recommend you do this with a simulator and not risk your real money until you've mastered the art of identifying these patterns. And that'll take some time. It could take 90 days or it could take a year. It might even take you 2 years. It depends on how much time you put in the market. So whether you put an hour in the market a day, 2 hours a day, or 3 hours a day, and that's 3 hours is all I would ever recommend. It depends on how much time you put in and as to how long it takes you to understand this, so you can use it to make regular income. But that is a time-consuming opportunity. You have to learn what you need to know to do what you have to do to take a little bit of money from the market and regularly make a living at this. And that's your goal, but you can't do it day after tomorrow. You can learn a little bit day after tomorrow. I recommend you plan on making this your next career and study like you're going back to college and spend another 4 years of learning what you need to know to do what you have to do to make a living. Gradually go into it. Don't come in with $20,000 or $10,000 and expect to double that money the first year you're at it. You will lose that money. You're better off putting in maybe $1,000 and trading micros after you've practiced for 90 to 120 days. That's the name of the game if you want to do the thing right. And there's no shortcuts. A lot of people try to use shortcuts. They crash and burn and fail and quit. You don't want to be one of those people. Richard Rube, hoping you the best results possible from just watching this one video. Think about what you need to do to learn what you need to know, to do what you've got to do to make a regular living from this business. Thank you.
Join us now only on SwissFT.com.